rule 11 UAA for determination of fair market value for shares other than quoted shares. So that means what? That means determination of fair market value for shares other than the quoted shares, and it is going to be applicable when? So this is going to be applicable as per section 50 CA, and remember, valuation as per rule 11 UAA looks like is diametrically opposite than section 56 subsection 2 uh, clause 7b. So as per section 50 CA, valuation in case of sale of shares where transfer is at a price lower than the fair market value. So in case of section 56 subsection 2 clause 7b, what was the situation? Situation was value the issue of shares by a company at a price which is higher than the fair market value, and that is where the income tax department thought to tax the difference in the hands of the recipient company as other source of other, as the income from other source. Under section 50 CA क्या हो सकता है कि कोई somebody is issuing shares, somebody is transferring shares of a company other than the quoted shares. Quoted share में कोई problem नहीं है because quoted price is the basis for the purpose of determining fair market value. It is in case of the unquoted shares. तो अगर fair market value is coming 100 and these are being transferred at 90, so this 10 rupees as per section 50 CA got to be taxed in the hands of the person who is getting the transfer of the share. So that means what? That means valuation in case of sale of shares where the transfer is at a price lower than fair market value of the asset, the difference will be taxed in the hands of the transferer. यानी कि जो आदमी ट्रांसफ़र कर रहा है अगर वो सस्ते में ट्रांसफ़र कर रहा है तो जो भी डिफरेंस है वो ट्रांसफरर के हाथ में टैक्स होगा, ट्रांसफरर के हाथ में टैक्स होगा. अनलाइक इन केस ऑफ section 56 subsection 2 clause 7b where the difference was to be taxed in the hands of the recipient of the money, and in this case also it is going to be taxed in the hands of the recipient of money only. Okay. So what is the valuation methodology? The valuation methodology is as per rule 11 UA subrule A1 small c small b. So this is same as we discussed earlier, that is A plus B plus C plus D minus L into PB upon PE. So either you can have valuation done in under section 50 for section 50 CA as per rule 11 UAA. Either you can do the valuation on the breakup value method that we have discussed already, or you can do the valuation as per rule 11 UA subrule 1 small c small c. That is, you can take a report from a merchant banker or from an accountant, and that is the choice which is available to you in case of rule 11 UAA and as per section 50 CA. Who can do the evaluation? In case of 11 UA subrule 1 small c small b, since it is based on the balance sheet and external report is not necessary but recommended from a chartered accountant or from a registered valuer. Merchant banker I'm not recommending because that might appear to be very expensive affair. Or in case of rule 11 UA subrule 1 small c report from a merchant banker और चार्टर्ड अकाउंटेंट इज रिक्वायर्ड, दैट्स मैंडेटरी. सो अगर आप इसको फॉलो करेंगे तो फिर आपको report from a merchant banker or from a chartered accountant you have to obtain mandatorily. So this is what I have discussed with you already, and that's why I'm going to skip it. So with this, friends, we come to the close of this session. If you have any question, any doubt, any query on whatever that we have discussed so far, you can please ask me that question, doubt, and I would be very happy to answer them.